Aloha, hey, it's Julie Ziemelis, 365 Hawaii with Real Broker, and I am here with all my wonderful real estate friends for your May 2025 island-wide market update to include our mortgage professional, and that is Travis Green from Guild Mortgage. And we have around the whole island here, we've got Jana Mahoney with KW Big Island, we've got Andy Madrid with KW Big Island, we've got Newi, and she's with Real Broker, and then Eric is with Real Broker, and so am I. And so what we think about today is the money. So we're going to let Travis talk about what's going on with the mortgage market first, so we can go from there. So Travis, what's going
on? So mortgage rates are a little bit higher.
Okay, that's dun dun dun.
Yeah, than they've been. And so if you look at the 10-year treasury, which we all know this, that the 10-year treasury is tightly correlated with 30-year mortgage rates, right? The movements that it makes. And so the 10-year treasury is trading above 450, 4.5. And that is outside of the range where we had been for the last 3 months. We've been below 4.5, but kind of bouncing between 4 and 4.3, something like that. So now we're above 4.5. So some of that's just uncertainty. Some of it's concrete concerns. I'll get into that in a second. So 30-year fixed rate mortgages for primary residences for most people, from most lenders, are going to be back up over 7%, right over 7. I'd say between 6.9 and 7.125 for most people. We're still waiting to see if there are effects, from tariffs. A lot of companies have said that we're going to start seeing that any day now. But we're not far enough into the year to see that show up in the data yet, the hard data of consumer spending and, the cost of goods. So CPI and PCE have not picked that up yet. So that remains to be seen, but it's a measure of uncertainty. Most of the focus right now for the bond market has shifted to the debt and deficit of the United States, which are substantial. And the House of Representatives actually today, May 22nd, just passed it's called One Big Beautiful Bill, which is their budget reconciliation bill. It's a tax and spending bill. And so now it goes to the Senate, where they will do their work on it and probably work it over and make it look a little bit different and try to pass it. And the idea is maybe sometime by the end of the summer, it makes it to the desk of the president, who signs it into law. The concern that the bond market has right now is that the bill, as currently constituted, is that it's estimated that it will add about $3 trillion to the national debt, and we're already at over 36 trillion. And we're already spending 16% of our annual spending as a country just on debt service. So interest on the national debt is 16% of our spending. And so hopefully that gets slimmed down a little bit in the Senate. And if that happens, if we get some reductions in that, either not as generous in the tax cuts or extensions, or a little more aggressive in some cuts in other areas of spending, we should see a good reaction from the bond market, and therefore interest rates on that. Because, for everything else right now, Fed's on pause for rate cuts. They're inflation is moving lower gradually, but unemployment's holding steady, and they're kind of just waiting to see what plays out with tariffs and inflation, and likewise with the debt and deficit. So, the expectation is shifting for probably no rate cut this summer from the Fed, maybe a rate cut in the fall, and maybe we're just going to be hanging out right around here. But Fannie Mae did say today that they expect interest rates to be like 6.1% by the end of the year and under 6% sometime next year. So
do we believe
I would love that if they are right. That would be fantastic.
Yeah.
Oh, and mortgage applications are down 5% from last week. We see this every time interest rates were up last week from the week prior. But we see this every time interest rates have, they breach that 7% on average. We see buyers pull back. I see it, like my phone rings less.
Yeah.
And so there's a little bit of a pullback in buyers when they hit 7%. And then once it dips back below that, that activity picks back up. The new activity, new applications, things like that. But there's people that are already pre-approved and in the hunt from when rates were 6.625 a few weeks ago that are not going to stop looking just because it's 7%. It's just, I think it might hold people back from applying.
Right. Hey, so if do you ever say this to people? Yeah, the interest rates went up a little bit, but the market seems to be softening and the prices are going down, so it kind of evens it out. Do you ever say that?
I don't say that, but I do say I try not to get in the realtor lane, right? So I never want a realtor to be like, did you tell my client that they could get a discount on this house? And so
You
what I
need to be
say
more
is,
aggressive with getting price cuts from the sellers.
yeah, what I do say is that, look, if your interest rate is 7.125 or 7.25% today, and you don't like that, let's look at what your payment is at 6.75 or 6.5.
Mm-hmm.
Figure out what it costs to get you there, and then let's ask the seller if they'll pay for it. Right? There's we're seeing more seller concessions, we're seeing price reductions. I try to explain that to buyers to where, let's say there's 30 grand in the mix on this deal from the list price to where it ultimately settles. How does it look if it comes off the price? How does it look if it's a seller concession for a permanent rate buy down? How does it look if it's a temporary rate buy down and maybe your rate's lower for the first 2 or 3 years, and then hopefully you're refinanced in that period of time? And so I try to help them understand how we can allocate that money, that theoretical discount from the seller, because I'll tell you what, I'm not locking rates over 7%. Sellers are paying for my buyers to be locking in the sixes,
Right.
And so yeah, that's a really good point. So I do say some kind of variation on that. I want people to understand what their options are.
Yeah, you're like, oh no, don't go. No, the prices are coming down. Complete the application.
Yeah. I'm like, it might go higher. It might go higher.
Yeah.
Lock now.
Okay, thank you. And also, people say, don't forget, 7% has been the average for a long time in this world, and so that it's not as bad. And they always tell you, they always go back to like 1983 when there were 18%. So, okay, so let's go over to Newi, who's going to give us the East Side update and tell us a little bit about what's going on with trending in those two markets over there.
Okay, hopefully I pulled what you wanted me to pull. So if you have questions, just let me know. I have definitely felt a lot slower over the last month or so. Not as much activity, and some people also saying that they're going to kind of wait and see. And so that's still happening. But I guess we'll start in Hilo. Here we go. This is Hilo. Okay. So since the beginning of the month, the number of active listings have remained the same since the beginning of the month, 94, and there was 13 sales since May 1, so I guess 13 have been listed since the beginning of the month. But the ratios, what you always want to know, and how much things are on sale. Things are a little more on sale now since the beginning of the month when we met. And so sales to original price is 95% versus at the beginning of the month it was 99.
Yeah,
so that's in Hilo.
Okay.
Yeah, so you can get a little bit of there's a little negotiating room compared to the beginning. The average days on market and median days on market have gone up quite significantly. So the median is now 47 versus 10. So we'll move on to.
So homes were selling 10 days on the market in the beginning of the month. Now they're at 47.
Well, it's median. So, and then the average was 32. And then when I checked today, it said 77. Let me just double check that yeah, it says 77 is average today, as of today. So I guess what probably happened is some of the homes that were sitting a while closed, is what seems like happened in Hilo. Um, okay, so moving on to HPP, um, I'll try not to have so many papers around next time. There, so there's three more listings than the beginning of the month. There's 110 now in HPP, so more in HPP than all of Hilo. Median days on market also went up to 78. And there's the negotiation room, how much things are on sale is now 98.5 sale to original ask price. So it's still almost, people are still almost
Getting full price. Yeah.
in full price in HPP. And then in Puna, we're up to, where did my Puna go? So now we have less inventory, but not by much. 6 less homes since the beginning of the month that are active. There's 379 active listings right now in Puna, and days on market have also gone up in Puna. Median is 82 versus 31.
Wow.
So it does seem like some of the ones that were sitting have been selling in Puna as well. But and did I say that? I didn't say the how much it's on sale yet, did I?
No.
We're at 95% in Puna as well.
Okay.
So
So in general, you're feeling like it's kind of slowing. You're not seeing a bunch of new buyer calls.
me personally, no, we were getting a ton of Zillow calls, but there was one property that was a weird kind of auction property that was they listed it very, very cheap for people to bid on, very inexpensive. And so we were getting a million calls, but they were all for that one house, and I'm so curious. Yeah, I'm so curious what that's gonna end up closing at. And that home was in HPP. But yeah, definitely slowed down with the calls. And then some people just deciding to kind of wait a minute to see what happens.
Yeah. Yeah. Okay. And that seems what's happening across the country actually right now. So kind of in line with everything else that's going on. Okay.
Yeah.
Thank you.
One thing I did want to say is that I'm still noticing that up to 700,000 and below, they're still going pretty quickly. Anything above 700 is kind of the ones that are taking longer to sell. And I think maybe that's where where it hits that point of like, is it better for me? Is it less expensive for me to rent or buy? You know,
Yeah.
I think
Yeah.
that's kind of where the tipping point might be. And then also what people can actually, what local people can actually afford is normally like right up to around 700 is what I noticed with a dual income.
Right. And then Travis, that's usually right around like if someone, I mean, if you had a $700,000 property, you just average amount down, it's like probably less than $5,000 a month, right?
Yeah, in that neighborhood.
Yeah. So that's two people trying to earn a living on this island. Yeah. So
I had a $5,000 a month mortgage payment, I'd have a stroke.
I know what people pay for in this town in Kona. I'm like, your house is $10,000 a month. But people have to look at that's and you know what that ultimately I think is going to keep the housing prices kind of lower if people just kind of stop at a certain point because they can't afford to pay much more. So, well, and we'll talk about what you think if it's going to happen with the prices when we get through people. So, okay, I'm going to remove your little spotlight and put it over on Andy, who is going to talk about South Hawaii. And he has the second most affordable houses in his realm of life. And what are you seeing out there? Are you seeing a lot of buyer demand? And what's your story with, what's going on over there?
Well, I think, hey everyone, Andy Madrid from Keller Williams, Big Island. So there is, actually my stats are, I guess, a breath of fresh air, maybe, because there's a lot in the market. The market has slowed down. So we talk about the south end of the island. We're talking about Kau district, and that our big neighborhoods here are Hawaiian Ocean View Estates and then Discovery Harbor. And we've got a couple other neighborhoods sprinkled in there, but those are the two main neighborhoods there. In Hawaiian Ocean View Estates, there are 62 homes on the market. Of the 62 homes on the market, 33 are permitted. So
Yay.
almost half of that are unpermitted homes. And they are selling. Those homes are selling. Right now, the pricing is between like $38,000 unpermitted, obviously, and $680,000
Permitted. That makes
that-
people think, oh my God, what the hell's going on?
Yeah, exactly. So 38,000 is going to get you like an acre of land. You get a little bit of an ocean view. It's a little shack that needs a little bit of rehab.
Yeah.
Could you live in it? Sure. It's going to be more like camping, not glamping, camping. Yeah. But it's got it's got a water system and there's no power. These are all off-grid properties.
Yeah.
Right now, as of March 1st, there are 10 properties that are in escrow between 115,000 and 475. Of course, 115 being an unpermitted property. We've had 16 properties that are sold since March
May
1st.
May 1st or
Huh?
you said March 1st. Do you mean April or May? Do you really mean are you
March. I kind of went back because we don't have as much activity. So I'm saying like from March 1st till now.
Oh,
So over the next,
Okay.
that's what, 60 days or so.
okay.
16 homes that have sold. The sales price to list price ratio is pretty strong, given our price, 98.5%.
That's pretty strong. Yeah.
Sales
Great.
price to list price ratio. And it's negligibly different if you look at the original sales price
Yeah.
to list price, the list price to sales price.
Okay.
And those sales were 69,000 to 495,000.
Okay.
Then moving down towards Discovery Harbor, that's actually interesting. So there's only been 5 sales. That community, for those of you that don't know, it's all paved roads. It's a golf community. They have a homeowners association, a really strong one that's super reasonable, and they provide private security to every home twice a day
Mm-hmm.
in that neighborhood. There were
It's
5
Zone 6.
Lava Zone 6, yep. So backing up to Ocean View Ranchos, that's all Lava Zone 2. So high homeowners insurance. When you get down to Discovery Harbor, Lava Zone 6, 5 sales in that neighborhood between 365 and 686. 365,000, 686,000. 98.7% sales price to list price ratio. Median days on market, 4.
Whoa. Well,
Yeah,
help me
4.
sell my lot. How's
There are some of those
how's lots doing down there?
Yeah. There's a lot
Bad.
there's like 20 vacant parcels right now.
Hmm.
The average price on those is about 75,000,
Okay.
vacant land.
I haven't gotten one phone call on my lot yet, so I'm thinking it's a pricing issue. So
Could be. There are 13 properties on the market,
yeah.
and we have 5 that are currently under contract.
Okay.
Average days on market for those is 99. So it's growing. We look at the sales, and say, oh, average days on market 4, and now we're up at 99. But the market, I think, is pretty strong. So I wrote 3 offers this week.
Okay.
I had to come in at full price on every one of them.
Oh, there you go. Okay. And what was the highest price point?
369.
Okay. 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 And just for our people who are watching this, and what do you get for $369,000?
3 bedrooms, 2 bath.
Okay.
Yeah.
How many square feet?
What was this one? 1,200, 1,284.
Like an average house.
Average house,
Okay. That's good. Okay.
The other one I wrote on was it's 255. We're buyers in this right now. I think it's kind of maybe normal, but especially down here, buyers are asking for costs.
Hmm.
What they're doing is they're they're hedging their bet, hoping it'll appraise because they're rolling pretty much most of that into, they're bumping up their price and asking the seller for a credit.
Yeah, yeah, exactly. And how are they doing in terms of finding home insurance down there?
It's really expensive. So in Hawaiian Ocean View Estates and Hawaiian Ocean View Ranchos, it's going to run about $5,000. We're
Yeah.
talking for a modest 2-bedroom, 1-bath home, about $5,000 because
Okay.
HPIA is the only carrier.
Yeah.
Discovery Harbor, you're in Lava Zone 6. You have lots of choices.
Yeah. Yeah. Just so people
Yeah.
know. So when you're saying, oh, look, it's 369, it's like, oh, well, then don't forget you actually have to add value of insurance.
Right. Now you're factoring in what's that costing you on a monthly basis. At $6,000, that's $500 a month
Yeah.
just for homeowners insurance.
Right. And that's when people try and like get away from Kona because they hate an HOA fee of 500. Well, they're going to get it right back with insurance costs in Ocean View Estates.
A lot
So,
of people pay cash and they avoid carrying the insurance.
right. They say, I don't want to do it. Right. Yeah. We've
My
talked
insurance
about that too, is
is
that people
reasonable.
sometimes go, it's lava zone 2. If my house gets taken by lava, well, at least I didn't pay years and years of insurance on it. Right.
Exactly. I mean, mine got really, really expensive for a while, and then that carrier pulled out of the state. I was lucky I was able to secure what I think is really reasonable insurance, but I'm just waiting for the day that the letter comes in the mail saying they're not going to renew
Yeah.
just because they're going to the state.
Yeah.
And then I just won't insure because HPIA I think is a ripoff.
Yeah, yeah. And if anyone who's watching this wants to discuss that further with Andy, the concept of unpermitted lava zone and making sure that you know where your money's going, because there's ways of getting a deal, but then there's also the risks of getting, those.
Yeah, I mean, there's ways that you get a lot of people that will buy property here because they think they're getting a great deal because they're buying land in Hawaii, but it's not all white sandy beaches, Mai Tais on the beach and palm trees.
Far from that, my friends.
What do you mean? It's that way in my world.
Yeah. Yeah. Newi doesn't have white sand beaches and cocktails, but at least she's got cliffs booming next to the ocean. So, okay, then let's pop over to Jana to see what's going on in the swanky part of the island. Let's see, Jana. There you go. So why don't you
Hello.
tell us about your multi-million-dollar properties?
I'm Jana Mahoney with Keller Williams Big Island, and where I'm going to talk about the Kohala area, so north of Kona. We'll start in Waikoloa Village Residential, which is where I live, and there are 37 active listings right now. They go from 689 to 2745, but that 2745 is a really big outlier. The median price is actually $1,110,000.
Okay.
And average days on market for the active listings right now is 80. And let's see, I think what I'm seeing right now is some of these sellers are still pricing based on last year's peak.
Mm-hmm.
And they're having kind of a difficult time pricing their houses with what the market is right now.
Mm-hmm.
And so what you can see is if you look at how many houses closed, I pulled it from January through April, and there were 31 that closed in Waikoloa Village. And it was from 380,000 to 1,922,000. And the median sale was 999. They stayed on the market an average of 75 days and sold for 94.86%.
Okay.
So
6% on sale.
Right. So I think that's kind of the buyers evening out their expectations based on what's really happening. And so I think that probably you're going to see a few more price drops. And when you look, I don't know what you guys call it, the hot sheet that comes up every day. You
Yeah,
see a
there's
whole
drops. There's like,
right?
yeah.
I just stare at that thing kind of obsessively. On the Waikoloa condo market, we had 30 active listings from 379 to 720 with a median of 464.
Mhm.
Average days on the market was 83. So I think that, there's been a lot of interest, but I think that buyers are being sort of selective, and they're kind of hanging on to, they're kind of hanging on to wait and see what happens. And 7 condos sold in Waikoloa Village from 375 to 729. Median price 469. Average days on market 96. This is where I see a pretty significant price. Sale to original price was 91%.
Oh, okay.
Yeah. So I think that tells us that the buyers are negotiating a lot more, and they're watching values closely. So you have to look at comps from this year, not last year.
Definitely.
So if you're doing a CMA and you're doing it 1 year back, it's like, well, maybe better do it 6 months right now, right? Because that's just kind of what's happening.
Yeah.
And I also pulled up just to wonder about this. The 7 condos, all of them that sold in April were 2-bedroom, 2-bath condos. And the monthly fees, this is in Waikoloa Village, went from $733 to $1,417.
Whoa.
So I think that's another consideration that's happening. You've got a 2-bedroom condo, and the cheapest HOA was $733 a month in Waikoloa Village. So I thought that was kind of,
well, that's approaching seaside HOA fees. Right?
It is.
Yeah. And also, real quick, just if people don't understand kind of the market dynamics, that people were moving to Waikoloa Village to escape high prices in Kona. And so they moved out there, and then the prices started going up in that neighborhood. And so do you think that it's going to go down as fast as it came up? It's because right now Kona's prices are coming down a little bit. Are you seeing kind of like an even, or is it coming down faster because it's the outlier city than Kona?
So I am seeing a small price decline, but it's not anything significant. And I think that the newer construction, because there's a pretty big difference in Waikoloa Village between new construction and the older houses.
Okay.
And the new construction, I'm not seeing a lot of budging going on with those.
Yeah.
And they're just sitting.
Oh.
They're just
Look, if the developer has a certain amount of money he has to keep, because he had to pay for the new construction. So interesting. Yeah. Okay. And so if you are looking for a brand new house, there's more being built in Waikoloa Village than there are in Kona. So some people like the brand new build experience. So that's a
there's a whole new complex that's going in at the north end of town.
Yeah.
It's gonna, they're actively building those right now. But those start at 2 million.
Oh.
Yeah. So none of those are quite ready yet, but there are a few other new construction houses that are in the $2 million area. So you basically got, a $1 million average, but that's a little bit misleading because you have a lot of houses that are less than $1 million, and then you have all these new houses that are running around 2 million.
There you go. Okay.
So, Monolani, we've got 8 active residential from 4.6 to 25 million. And they have been on the market for an average of 321 days.
Ooh.
And in April, only 1 home sold at Black Sand Beach for $7,895,000. It was only on the market 19 days. So, if you have a great property and you price it right, it's still going to sell quickly.
Somebody's out there looking.
Right. So there is what the word I would use to describe buyers right now, maybe in the Kohala area, would be patient. We didn't see patient buyers in the last few years, but they seem to be more patient now.
Patiently waiting for a deal.
Yeah. I mean, they're not jumping on things. They're paying less. They're making offers that are a little bit less than list. But here's one that sold in 19 days, and it was, sold pretty quickly. We've got a lot of that going on.
Yeah.
Monolani condos are 29 active listings right now from $1,199,000 to 3,599,000 with the median at 1,790,000. Average days on market 106. So this is a pretty steady inventory. We're not seeing a whole lot of change going on in the number of houses. You know, they're selling about the same rate that their new listing. I am seeing that pricing matters. 8 condos sold in Montalani in April, and 1,995,000 to 3,395,000, and let's see, average days on market for those units was 97 at 94.19% of the sales to original price. So, you know, buyers are negotiating. They're patient and they're negotiating.
And most of those people who buy those kinds of homes are investors, right? Those rental houses, right?
Yeah.
Okay. Because I remember about 2 months ago, there was nobody buying anything.
Yeah. Yeah. It's gotten
They come back.
I think so. I mean, you've got 8 condos. That's
not bad.
Yeah, it's not bad.
0 like you had about 2 months ago. So and just so I'd tell you guys that there was a bunch of I looked at the along the western seaboard where we got a lot of our feeder market. There was a lot of cancellations of escrows during February. And so we're seeing kind of that roll down. That's why we didn't have that many sales in April. And maybe we're starting to see maybe a couple people come back into the market, but that definitely kind of started that kind of it turned into a very slow market for us in the spring when that kind of stuff started happening. So, okay. And then what's happening down in Waikoloa Resort?
Okay. I wanted to tell you real quick too. I pulled up the HOA fees for the Montalani condos.
Yeah.
I just think that this is something we should probably talk about. It goes from $1,350,000 per month for a 1,300 square foot to a 23.
Did you just say $1 million?
No. I'm sorry. 1,350 per month for a 1,300 square foot condo. And then the highest one was 2,372 for a 1,400 square foot.
Wow.
So, I mean, it depends on where you are.
Amenities.
Right. And you have to realize too, these amenities are resort level amenities, right? They're all short-term vacation rentals. That includes their insurance. It includes the maintenance. It includes, usually pretty fancy pools and workout facilities and that kind of thing. So it is resort quality amenities. But yeah. So, okay. What did you say you wanted to hear next?
Waikoloa Resort. That's your average investor. It puts buys condos in Waikoloa Resort. So how are they feeling?
Waikoloa Resort, there's 49 listings right now,
which is a lot.
It is. It's a lot. 679 to 1,651,000 with a median of 1,000,003. Average days on market 111 days.
Okay.
In April, there were 5 condo sales from 325 to 1,006,000 with average days on market of 81 and a price sales to original ratio of 92.4.
Okay.
So, buyers are still negotiating. Too.
Yeah. So if you're an investor, you want to make a negotiation opportunity for a nice resort community. There you go.
Yeah. But again, those are all, they have the resort amenities, and those are typically investors. And a lot of people have those as short-term vacation rental properties,
Right.
Or there's
you don't have as many, you don't have the older stock of housing. It's just beautiful, right in the golf course experience and next to the ocean. And it's nice.
And then the last thing, Puako basically has 3 residential from 5.9 to 28 million. That's the really nice houses. Median days on market is 187 days. But this is, I think, very interesting. In April, 2 sold. One was 1,000,003 and the other was 1,599,000. And they were on the market 0 days and 12 days.
Because they're on the other side of the street, so they don't have ocean view, but they're cheap. Therefore, everyone jumped on them because it's a great investment opportunity to be in Puako.
Yeah. So last month when we were talking about Puako, I said, I don't know why this one's such a good deal, but it is. Boom, it sold in 12 days.
Yeah.
And
I tried to sell that. After you told me about that, I those 2 people know. I'm like, go get that house.
I know. I know it went fast, and they went for 100% and 104.
Yeah, there you go. Yeah.
So,
It's great. I mean,
you know,
you're in Poco now. So
yeah, I mean, you've got a well-priced home there. It's still going to sell, right?
yeah.
Buyers are ready and they move quickly if you've got it priced right.
Yeah, but no ocean view on those. So, okay, cool. Okay, so what are we doing now? We're looking at Eric Ziemelis. Let's switch it over to Eric.
Hello. Okay, so today I'm going to do the three areas that we kind of monitor to see how the market is doing, and those are Pualani Estates, Lokahi Makai, and Ali'ilani. And let's start with Lokahi Makai because that's just kind of work our way down. And there are 5 active listings. Oh, excuse me, 3 active listings and 1 contingent and 1 sold is where we're at. The prices range anywhere from $9.99, and I got a little story on this one. This is a condo that we actually, excuse me, this is the house that we sold right before Christmas, and I guess the current owners didn't fit in or whatever happened, so now they have put it back on the market, and they are roughly close to where we sold it for. So it'll be interesting to see how that works out for them. And then we've got the next one is at $1,099,000, and lastly is $1,185,000. The contingent was $1,175,000. And the sold was sold last month, and it was listed at 1.275 and it sold for 1.215. So a $60,000 decrease on that one. So these are maybe one more than we normally have available for that particular area. And then Pualani Estates. So we have got 3 that are active, and they go from 975,000 to 1.109 and 1.190 are the ones that are there, and we've got 2 that are contingent. So people are buying even that, and these were lower priced. That one was 925,000, and the other one was 928,000. And then, but we had 2 that were sold in the last say month and a half, and that mark was on the market 42 days, and the one below that was 30 days, and the one was sold at 1,035,000, and it sold at asking with 42 days. So there was no drop on that one. And the second one was on the market 30 days, and is listed at 1,070,000 and sold for 950. So it's $120,000 discount on that one. So I think they definitely had to get out of there is where that one was on that one. They were not fooling around. But we are coming back. What I would say with these last 2 are kind of a normal position with the number of units for sale in each of those neighborhoods. And the last one is the Ali'ilani condominium complex, and there are over 350 units in that complex. And usually in the past, there's been about 10 units is kind of what we barter for being a normal market, and we have 11 units for sale right now. Okay, so it's kind of fitting in right where it was, and we've got 2 contingent, and the prices that are contingent are $479,000 and $579,000, and we've got 3 that were sold. And just to give you an idea of pricing, one was on the market for 171 days, which is definitely a long time, and it was listed at $373,000 and sold for $345,000. So reasonable decrease. And the other one that sold had been on the market for 238 days, which this is a long time for this particular complex. And that was listed at $469 and it sold for $479. So I guess people were starting to get excited. And it was above asking price, if you could believe that, by 10,000 after 238 days. Interesting. And the last one was it was listed at $499 and it sold for $49, and it was on 12 days on the market. So we are not seeing, I think what happens in Ali'ilani, I think you're seeing a general price decrease over everything, but I don't see any, super stellar market deals to be had here. It's just kind of holding consistent, and with about 10 condos on the market, it's pretty average. You know what I mean? The buyers are out there and they are selling and they are going contingent, but they're, again, like everybody else says, they are looking for the right price.
Good job, Eric Ziemelis. Okay, so we don't have Lance with us today. I'm just going to give you guys just some basic numbers on what's happening in North Kona. I do want to say that there's some shocking numbers. One of the sales volume numbers that we normally don't report on, but the sales volume year over year in condominiums in Kona dropped 73%. So that's the amount of money changing hands, 73%. And so it was down. And the residential market was down 37%. But right now, year to date now, the residential right now is down 4.4% and down on condos 4.2. So year over year definitely showed that we've definitely been having a slow market. And then for the number of sales for residential for North Kona, last year was 32, this year is 28, so we're down 12%. And then for condos, we had 47 last year, we had 22 this time, and down 53%. And then we have median sales price. A single family home in Kona right now is 1.1 million, and the condominiums were 775,000, which is actually down 29% from a year ago, and residential was up 10% from a year ago. So there you go. I'd say I just want to talk to you guys about, what's going on with the future. What are you guys thinking? I'm gonna put Newi first on the future because I know she has to, get going pretty quick. But are you feeling optimistic? Are you feeling like you're just gonna hang? How are you feeling?
Um, well, I'm a silver lining type of person.
Okay.
So, I I feel like you just can't freak out. I've been seeing a lot of YouTubes. I've watched a ton of YouTube, and a lot of realtors on YouTube and just the social media influencers they're very doom and gloom.
Right.
And
Market crash.
yeah. But the thing is, like, there's cycles all the time, and and every time there's a cycle. Sorry, my dog just
I love your
loves
dog.
he just loves
Here he is.
giving attention. Say hello, Mason. Um, he so and there's always cycles, and every time there's a cycle like this, people are freaking out like, oh my gosh, this is different than the last time, or this is the same as the last time because XYZ thing, and they're always trying to predict, and you just can't predict. There's just uh, you know it's just so hard to predict because there's always weird black swan things that happen that so my attitude is don't freak out. If the advice that I give to my buyers, and sellers actually, is like, if you need to buy a house and bless you, and you can afford that house, you can afford the payment, and you need it, and it makes sense financially because it actually rent is not less expensive. Go ahead and buy a house and stop trying to time the market because you'll drive yourself crazy and it's depressing also. So yeah, I'm just taking that silver line approach.
Yeah.
Making sure
Optimistic.
you're very happy.
Optimistic
Yeah,
approach.
he's an optimist also. Yeah.
Yeah.
Thanks, guys.
Okay. It is kind of fun. Thank you for being optimistic. It's a good stance. I like that. And then Jana, what do you think? What you're seeing in terms of because you got a lot of investors in the market. So what do you think?
Well, I was going to say kind of something similar to Newi. There's a my mom was a real estate agent. She used to say there's a butt for every chair. And there's a buyer for every house, right? And people sometimes need to sell. I mean, there's like divorces, health problems. They need to move to the mainland or who knows why.
Mm-hmm.
It just happens all the time. There's just a churn. I think there's probably more of a churn here than there is on the mainland, right? So I think a lot of sellers think they're going to get the same price that they got a couple of years ago, and I don't think that's accurate.
Mm-hmm.
And I think they're going to find out. They're just going to find out. But life events happen, like, like Newi said, and you have to sometimes you have to sell, sometimes you have to buy. So
Mhm.
traffic is down. I'm seeing fewer showings. But it's a shift period. And I think whenever you have a market shift, that's just to be accepted, and people have to kind of acclimate to the new reality.
There you go. There you go. That's good. And then no, you're supposed to say like this. Oh my God, there's gonna be deals in the market. We're gonna lose 50% of the equity. No, that's not happening. There's too many people want to live here. Okay, and then Andy, what's your thought process for the next few months? Do you see that we're gonna see, at least with your side, you have more of affordable housing than
Well, I think that I have a big client base in California because I was a real estate agent there. So for people that are looking to invest in real estate, maybe they're moving from just ever owning their own home, and now they're like, you know what, I think we might want to get a rental property. We might have an investment property. I think there's more opportunity here for them than say places like California, because it can get so expensive there.
yeah, or even Maui or Kauai or Oahu. Yeah.
Yeah.
Even
So
the other islands, yeah.
when I talk to people about, they look in these neighborhoods where the cost of homeowner insurance is expensive. And when they're in California, they're like, yeah, but we're already paying that. So they don't care because
Right.
they're already paying that. So it doesn't really phase them that much. But there's a lot of opportunity here that you're not going to find on the mainland. I mean, I look at some of the markets, particularly ones on the East Coast, Northeast. There's still a lot of markets where they're having to write offers, waive inspections, waive contingencies, having to come in asking price a lot. And I think it's just because they have so much limited inventory, and they have buyers in such a different market than say we're here or even on the west coast of the US.
Mhm.
In these little small communities everybody wants to live in. Everybody lives on top of each other, when you talk about places like New York and whatnot. So coming out here as an investment, they're like, hey, we get space because we actually can buy a lot that's 9,000 square feet. I'm like, that's nothing. But
Yeah.
over there, it's a ton of space. So yeah, I do think there's really good opportunity. I'm dismayed that interest rates may not get down as low as I'd hope they'd be by the end of the year. But yeah, I think that, it's like, I don't like the term, marry the house and date the rate.
Right. That didn't work.
They'll do a 2-1 buy down. The problem is that they did a 2-1 buy down a couple of years ago, thinking they'd get a better rate. They're kind of facing the music right now. So it's kind of unfortunate.
Yes, it's timing the market, timing the feds, everything else. So yeah.
I don't talk to them about that. I always talking about, it is the house, I'm not talking about people say, well, we think we buy it and maybe just get rid of it in a couple, 3 years. I'm like, okay, don't look at it that way. You have to look at it longer term, right? Because I know what the interest rates are going to look like.
Yeah. If you buy our house because you're holding it on for a long-term investment, it usually goes up.
Well, and I'm more optimist. I think that there's like Jana said, there's a butt for every seat in the used car business. There's a buyer for every house, even the ones that are awkward floor plans. I showed one the other day.
Yeah.
And I liked the house. The floor plan's kind of funky, and I only find that floor plan in one neighborhood on the island. And they built a bunch of these, and it's a weird layout, but I don't know, it kind of works. But a lot of people it doesn't resonate with people.
Yeah. That's another thing too, that just because one person, like I always tell people, I say it's a butt for every seat in the island too. Elevation, if you want. In fact, the living on lava is not my cup of tea, but I've heard people say I have horrible allergies. Living on the lava makes it so that I'm not breathing pollen. I'm like, hadn't thought about that, and then the Kogi frog experience, if you're out in the lava too, that you're not surrounded by, monstera all over the place. You've got Kogi frogs screaming into your room at night. So yeah, there's There's different
We
things.
don't have enough rain in Waikoloa Village for coqui frogs.
Yeah, we've gotten so much rain in the last like month and a half. It's like insanity. They're rushing down
We
from
also don't have the
above us.
background like Eric has behind him right now. We don't have that here either.
Yeah,
I'm getting,
yeah,
I'm
that's
getting
the birds.
sheep in the yard to eat everything because it's been so dry.
Yeah.
So I have a family of 8 that come in every single evening. They're here in the morning early because they set the driveway alarm off, and then they come in the evening, and the cameras will pick them up at night. So the lights are going on outside, and I'll walk, and they eat everything. I mean,
Oh.
the Mary are gone, the papaya are gone. They're eating all the leaves of everything, the dragon fruit. It's all just the coffee. They ate all of it. All I have is a bunch of sticks.
Oh. Like having deer. So
Yeah, it's like having deer.
yeah.
Exactly.
So Eric, I will ask you, but before I go to you though, because we're talking about the sad, rate experience. Travis, and I know that it's hard for you to prognosticate what the heck's going to happen, but seeing everything that you see in the market indicators out there, really, are we kind of stuck where we're at right now in terms of rates?
It kind of seems like that to me, frankly. As the national debt comes more into a prominent focus with the bond market, that I don't know. It's hard to unfocus on that. If you notice it now, it's 36 trillion.
We were trying to get that down, but
well, I mean, yeah, I have slides on this, but
yeah.
The bond market, I think, you saw it go up this week. I think some of that was probably just in response to the direction of the tax and spending bill in Congress.
Mhm.
And then it's going to probably back off for a little bit or stay where it's at, probably while it works its way through the Senate, the bill.
Mhm.
And then when that bill comes into focus, if it is still adding a lot to the debt and expanding the deficit, you'll probably see bond rates go higher, bond yields go higher.
Okay.
Unless at the same time we see unemployment really go up. If unemployment starts to really go up, then the Fed's probably going to start focusing on that because they have two statutory responsibilities: maintain low inflation and promote maximum employment. And so inflation's been going in the right direction for 2.5 years.
Yeah.
Employment's been very low and very stable. And so if that breaks and starts moving higher, they'll probably start cutting rates.
Okay. So tell people so when do they look at the employment numbers again?
I mean, we like there's the non-farm payrolls and the ADP private payrolls come out every month. And then there's weekly jobless claims as well. And then also monthly, there's the JOLTS, the job opening and turnovers. So they call it, openings and quits. So those come out every month, just like CPI, the Consumer Price Index, and PCE come out every month for inflation. A lot of companies, especially companies that sell consumer goods, are not posting earnings guidance, which is very unusual. And so, Walmart came out last week and said on an earnings call that they're going to face, consumers should expect to see fewer goods on the shelves soon and to be paying more for them. Retail, especially grocery, it's such a thin margin business. And so most retailers like that probably will be passing on any price increases to consumers. And so the market has responded really favorably when there's like positive news on the tariff and trade war front, especially the one with China. But what that did is it took tariffs from 145% on Chinese imports to the United States, and it brought them down to 30% over 90 days. 30% is a lot. I mean, the United States economy is a very robust and durable thing. I don't think 30% tariffs on Chinese goods are going to like knock the economy off course as an isolated thing. But that's still, 30% increase on goods is can be a lot, especially with people at the lower distributions of the income ladder who are already struggling, already carrying more credit card debt, already, spending less at McDonald's, spending less at Walmart. So, the focus will be, if the consumer gets into trouble and unemployment starts to rise, the Fed will cut and, interest rates will probably go down in response. If employment holds steady and inflation continues its path towards 2% or flatlines, but the debt continues to grow and doesn't get addressed, the bond market will probably punish the United States for that. That's the message coming from the bond market, which means higher rates, and also that means higher rates for everybody around the world because so many things.
It's all tied together, right?
Yep.
So I'm glad that Newi's not here to listen to that wonderful silver lining that you did not give us. Thank you.
However, can I just say one thing? Can I say one more thing? Can I share my screen? Can I show you guys a chart?
Yeah, if you want.
Listening over here. Can I ask a question?
I knew he's there.
Sure.
I'm still listening. I'm just wondering what your thoughts are on the Moody's downgrade, and because I know that it affected the bond market a little bit. So I'm wondering what your thoughts are.
Yeah. So context for that, there are credit rating agencies, Moody's, Fitch, and Standard & Poor's, and they rate all kinds of debt and bonds and credit. And so last Friday, Moody's became the latest one to downgrade America's credit rating from AAA to, I think, AA1. The other two major rating agencies, Fitch and Standard & Poor's, had already done this downgrade over the last few years for the same reasons, because of especially brinksmanship when it comes to raising the debt ceiling or not, toying with the idea of not paying our bills as a country. And then the Moody's downgrade was to signal disappointment in how the United States is managing its fiscal house. And the bond yields did rise kind of in response to that. I think that ratings change in itself wasn't revelatory for the industry or for the market, but it's an indicator of how bond traders are thinking about what the U.S. is doing, especially with debt and deficits.
Right. Okay, so you're going to show us something.
Oh, yes.
Something good?
Yeah. Well, this is for people who see this FHFA home price index.
No.
This is for people who want to, I hear this from people sometimes where they're like, oh, there's a recession coming. I'm going to wait for the recession and then I'll buy a house. So this is a chart from the Federal Reserve. This goes back to 1975.
Okay, so I made you host. I made you host so you can pull the screen up.
I have to hit.
There you go. Yeah.
Got it. Okay. Now here we are. See, you can see this. Yes.
Uh-huh.
So this is the home price index from the Federal Housing and Finance Authority going back to 1975. This is a chart from the St. Louis Federal Reserve Bank. And so this blue line here is the home price index. So you can see it mostly goes in one direction, up and to the right. Here's 07, 08, 09 is this period right here. These shaded gray areas are recessions. So all of these are recessions, right? So what you can see from this, and what I want a lot of people to understand when they talk about waiting for the next recession before they buy, is in most cases, home prices don't even blink when there's a recession. Maybe they flatten out, but they climb most of the time. This right here in 2000, this dip here was because this huge recession, a lot of it had to do with the housing industry, right? subprime mortgages, overbuilding, things like that. And so we were in a housing bubble, and that contributed greatly to that recession. It took us a long, number of years to work through that, but then they resumed. And so that's like, for people who are like, I want to, wait till the next recession. Okay, well, the next recession might not result in any kind of decrease in home prices.
Mm-hmm.
That might be disconnected from this, from the next recession, because there will be a next recession. But typically they don't cause a huge pullback in home values.
Yeah.
Not to say this next one won't, but typically they don't.
That's good. That was a good chart. Thank you. That's like interest rates are usually around 7% and home values usually go up. And then Eric, do you have anything that you want to add to the mix?
You guys have covered it pretty well. My only thought is this: is one thing that Hawaii has done over the last, since I've been here at the time, is it looks like that we tend to sort of kind of follow what's happening on the mainland, particularly like the West Coast. So it'll be interesting to, we tend to lag about 6 months behind there. So one indication of what's going on is just seeing what's happening on there and kind of follow, 6 months down the line. To a point. I mean, because we're still our own point, but but trying to predict it is always like, is it up? Is it down? There was a big prediction of the interest rates were going to go down, things were going to change. And, of course, things shift all the time too. So you're never quite sure what's going on.
Yeah. Okay. So speaking of Zillow, across the nation, 24.5% of listings in April had a price cut, but that's compared to 23 in March and 22 in April of 2024. So that's about 20% kind of getting just to get it sold. And then 27% of homes sold above their list price in March. That's up 24.6% in February, but down from 30% in March. So again, not crazy. So the inventory levels though are 22% lower than pre-pandemic levels for the month, but new listings increased 9.8% month over month in April, and new listings are 19% lower than pre-pandemic levels, but they're 19.6% more listings active in April compared to last year. So there's more houses coming on the market. Theoretically, we can go back to the buyers have more choices, and they can act a little slower, and they can be a little bit more methodical and thoughtful about buying what they want to buy. But there's no the market is crashing. And so it's a market that I guess we're just gonna have to see how it goes. And in the meantime, we're all gonna go on vacation while we're waiting for the buyers to get back into the market. So if you guys have specific questions for Newi, Andy, Jana, or Travis, or me and Eric, I have their contact information below. And we will be back in June. We are actually going to be on vacation at the end of June. So you guys will see something when we put it out on YouTube. But in the meantime, if you guys want to look for homes, we have our new website, 365hawaii.com, and you can look for listings, and you can also see the market statistics yourself, and you can contact us and we'll help you find a home. Thank you everyone for being here, and hopefully that you guys are having a nice month ahead, and we will see you next month. So